What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for May 19th, 2023. So that sounds like something you're interested in. Consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So, two massive days to the upside. We are going back to all-time highs. If that doesn't scare you, I don't know what will. This is something over the past 2 days. I talked about this yesterday. I don't know if my video uploaded correctly. I don't believe it did, so I do apologize for that. But yesterday's video, just to kind of highlight what I talked about in that video, was essentially talking about um, we have no news right now. And the reason why the market is pumping is because they are advertising this uh, debt ceiling deal as being this huge thing. And something I've talked about previous to last night's video was essentially pointing and highlighting the fact that, um, it's all a dog and pony show, right? The whole debt ceiling, it has to be done. If it doesn't, you're talking about major crater in the market in general, in every aspect, and not just in the US market. You're talking about around the world. People are heavily intertwined with the dollar in our markets. And so, with that being said, it's in everybody's best interest that the US does not default. So, this whole, we're going to have a deal by Sunday, there is no actual deal yet. The market is essentially pumping off of hopium. What if on Sunday there is no deal? You're talking about all this big move that we've had over the past couple days, which has been roughly almost a 200-point move on the SPX. It's all going to be taken back, right? And then it could potentially even be more if there's bigger issues. And so, nonetheless, you can't, we haven't broken out of range yet. Tomorrow, if we break over the 4,200, 4,300 is the next section. I still don't feel like we're in a complete bullish market. The sentiment has not changed, and this is what should be the scary part. I realize that there's a lot of times when there's a lot of things typically going on in a normal market. But something I keep pointing and highlighting, I am normally very much a permabull. But there's one thing you just cannot ignore, is that the Fed is continuing to raise rates, and they are not stopping even after multiple banks have broken. If that does not strike fear into you to think that this thing is going to go back to all-time highs, you're going to wake up one morning and this thing is just going to be cratered. All right. The fact that they're continuing to lay on rates. Now, if the Fed were actually paused at this point, I could see it, right? I could see strength in the market. But the fact that you have nothing else backing it other than we're coming up with a deal for the debt ceiling, yeah, you need to, or the world essentially. And I think that's what's kind of fueled this pump as well, is you've had Yellen screaming from the top of her lungs that if it doesn't get approved, all this is painting this horrible picture, which, yes, right, it is that bad. And then you have Biden and you have Harris come on, and the whole rest of the dog and pony show come up and say we're going to have a deal by Sunday. Well, it's not done yet. So how are you going to say it's going to be done by Sunday? Right? Like, it's taking you all this time. You've had 6 months to try to come up with a plan, and it's taking you to the deadline. You think you're going to automatically have a deal by Sunday? Like, the market, try to think that the market's going to think realistically, is by far not at all going to happen. And if you're in the market at all, you know that, to think that it's going to make sense, it won't. And so this pump, this is why I watch the ranges, right? Like, okay, we can break out of 4,200 tomorrow, go racing up to 4,300. That's fine. That just puts you in the next category. The sentiment in the market hasn't changed, right? And you have to understand that whenever you have huge consolidation, I'll point this out real quick on here as well, so you can kind of see what I'm talking about here. You have to understand, when you have massive consolidation like this, typically what happens is you'll play range, you'll get a huge spike up, kind of like you saw here, and then you get the drop. So this is the liquidation, because essentially the markets know that you got tons of people, sellers here, and they have their backstop like essentially right just above that level, right? So you could say it's roughly around 41.66. It took us a long time to break over that. Do we get a liquidation spike and then that's the nail in the coffin that sends us down? You don't know. We didn't have any kind of liquidation spike to the bottom side to be able to do that. And see, what I'm talking about is you'd have the same thing here. Now, if the market was back down here, you'd have a huge spike down, which is kind of what I've been talking about. Like if there was going to be a new bottom, I really feel like we would come down here, have like a consolidation spike, like we're going to break, and then we could potentially crash, right? Maybe we dive as far down as we can. Maybe it's only 3,400. We would liquidate all the stops because people are assuming that the stop would roughly be around here, the 36.26. It would stop everybody out, gather enough shares, and then it would just jet after that. That was what my original thesis is about. And it also works the same for the downside. Something I've talked about, right? We've kind of been hovering around this level. Get some liquidation spikes, liquidation spike, and massive just sell off. That could be what this is. Maybe we touch 40. That's what I'm saying. 4,300 is not safe, right? Like we can pump up to that, but that could be a liquidation, stop everybody out, and then dive. It could very much be a strong possibility. And also, this does look kind of like an ascending wedge right here, which isn't good to see. If you know what this does, and something I talked about almost all last year, this was pretty much almost the whole. The only technical that almost worked last year was these ascending wedges, which essentially means that this thing's going to dive, right? Is typically what happens. You can see an extending wedge here. We had a small one here. We dived. Now you're starting to build a bigger one for a potential dive. And so maybe it is, maybe it isn't. But ultimately understand that the biggest concern I want to bring up, and I'm not trying to scare people or fearmonger people, I'm just trying to make people aware that the danger that we're currently going through is bad, right? Like again, if the Fed weren't continuing to raise rates, I wouldn't be worried. I would try to play to the upside, but the fact that they're continuing to do it is making it very, very concerning, considering you just had bank breaks. And let's reference back to Elon Musk. Now, Elon Musk came out, I think it was about 2 weeks ago now, and said we are in a mild recession. This was before monetary policy, before a last 25-point basis move. He said, if we get another increase, it's going to be a horrific recession. Maybe not horrific was the word he used, but it's going to be a very nasty recession is the wording he used. We got another 25-point basis move. And now we had a jobless claim come out today saying that things are fine and dandy, that people are back to work. Of course they are, because inflation is still very, very high. So that is why there's not a lot of jobs out there. And that is also the concerning, is that it's okay. That paints a very manipulated picture, because what that means now is that the Fed can come in another 25-point basis move. What is that going to mean? The amount of pressure you're putting on the consumer and the amount of pressure you're putting essentially on the banks and small business with these rate increases. Again, you have to realize rate increases, what do they affect, right? What is the most sensitive to rates? That would be your bonds in essentially the housing sector. To own a home right now is absolutely ridiculous. I think that like the average like over $800 more to own a home than it is to rent a home at this point. So with that being said, because if you want to talk about HOA fees and all that stuff, right? HOA fees have owning a condo right now is absolutely absurd, right? Because they're trying to absorb all that cost through the HOA fees or the condo fees compared to what it was, right? And you're seeing massive increases in condo fees because they're trying to absorb the inflation rates. And so with that being said, like these things are, you can't ignore, like the housing sector, that could take a lot of time to play out. So you can't put big money bets on housing, right? Like that's going to take a while to play out. But we talked about the maturity of the loans. But the thing is all you would need is rate cuts to happen, and then you wouldn't have all those problems. But we're not cutting rates yet, are we? We're still increasing rates. So we're still in the first stage of this 3-stage process. See, this is my concern, is we don't know, right? When is the Fed really going to pause? Right. And the last thing you want to do is pause and then have to increase rates again, because that would just be like an automatic crash at that point. Right. That's the last thing you want. And so Fed will continue to overshoot this until you get something major to happen. And when there are many things out there that could potentially happen that I don't even point out on this channel. And so that is my concern. Again, I am very much a perma bull, but this pushing up because of essentially the market coming to a deal on the debt ceiling. Again, you have to understand. This is what I talk about. You have to understand the state of the market and realize it is very dynamic and it changes. So for the past couple of weeks, we really haven't had any major news, but we've been building up the debt ceiling thing. Obviously, it's a big deal because if we defaulted, that you think a crash is bad. This is like way worse than a crash, right? Like you would instantly lose like 20% of your money, right? Like whatever was sitting there, the buy power would essentially be gone. 20% of that buy power would be gone. So with that being said, yes, it has to be fixed, right? But they're going to play this game until they can get what they want. It's a political game, right? They want specific things, saying that this is what they want, and if they don't get it, they're going to play chicken until the very last minute, and that's what they're done. They've had 6 months to do it, and now they're just now starting to do it. And so with all that being said, we're pumping, and it's an artificial pump. You should not believe any artificial pumps that have been happening. If we run crazy like this, that is definitely not a good sign. You don't want these huge, massive runs like this, because that just means this thing's going to come crashing down even faster. We've seen that. We had it here, and we're hitting the top. We're hitting 4,200 now. Wouldn't be surprised if things dives down. And you have to understand, tomorrow is options expiration day. There's a lot of money coming off of options at this point. Are we going to start selling heavy because of that tomorrow? It could be. There could be a lot of different catalysts. And we got Powell tomorrow at 10. I believe it's 10 a.m. tomorrow. He is giving a speech, so I don't really know if he's going to be fielding questions. Again, if he's not fielding questions, then it's a different story. It may be a non-event, right? If he does any kind of pre-video or whatever like that, those are non-events, right? Like he's pretty much going to just reiterate what he's always said, and it's not going to be anything new, right? It's until he gets questioned, when people ask specific questions that he tries to avoid, maybe catch up, make him step on his own foot and come out with some kind of information that could expose and scare the market, right? But if it's just a speech, we may not get that tomorrow, but be aware that it is tomorrow. And then understand, again, FOMC meeting notes is what I'm looking for. It could be that big catalyst that changes the dynamic of the market, because if they start talking about a recession, then that's troublesome, right? If people are still, this is the thing, is when the jobless claims come in lower, people think, okay, well, the market is okay, when it's not, right? Like the Fed, and again, something I keep highlighting, you have to understand the Fed need inflation to come down and demand to come down, and it's not coming down. And that is the big problem here, right? And so we shall see. We'll see. But again, I'm not trying to fight the trend. If it wants to go up, I'll make money up. I'll make money down. It doesn't matter. That's why I know how to play both ways. And I always suggest that you learn how to play both ways. But ultimately, moving forward and talking about, even if we were in a normal market, we've had a massive run. Why would you buy being way overextended already? Right, like we are way overextended. On a normal market, I would still wait for this to retrace back at least 50% before even buying into it. So I'd at least wait to the 4K mark before I even thought about buying back in. right? Because you don't want things to just keep going overextended. They can't do that. It's not stable, right? Like tomorrow we can open up and this thing would be right back down the 4150 mark, if not lower, right? So these are things you have to keep in mind and can't just assume buy the top because I'm going to miss out. We need to break solidly over 42, the 4200 mark, and then hopefully get above that. And then again, it puts you in the 4300 range. So you could ride it up to 4300 and then take profits. Like I wouldn't risk it. Like I think you're putting too much risk on and being too hopeful for this thing to just keep going, right? When there's too much bad, right? Like I don't understand that what the Fed is doing is a ticking time bomb that can go off and explode in anybody's face at any time. And so that's what I'm trying to talk about. So nonetheless, we'll watch the 4200 tomorrow. Again, very, very important. We'll see if it does break above there. Again, if it does, I'm just looking at the next range to the 4300, right? And again, until the market sentiment changes, then I'm not really concerned about it, right? Like I need a natural pullback for me to consider getting back into any kind of position or adding to any position. It needs to pull back naturally, right? I'm not talking about a crash. I'm just saying a healthy pullback. Healthy pullback is roughly 50% of the retracement, right? So something I talked about roughly, if we pull back to the 4K mark, I'd be like, okay, that's a good pullback. What stocks are down the most? Is it any of the ones that I always watch? That's why I always have a short list, and I play those, right? Then I buy positions or add more, or whatever I got to do on that particular move. I don't buy the top and hope it just keeps going. It's not going to keep going, right? Like it's going to eventually pull back, and again, very overextended here. So we'll see how we open tomorrow, and then we go from there. Bitcoin, it's kind of sitting flat. Again, 2600, 26K mark. We'll see. Again, the 31K is where you want it if you want the bulls to continue, and bears, you want this to break essentially that 25K mark and see where it goes from there. Gold coin came way down. Again, this is the reason why this is pumping me is because of recession fears. And now with the jobs report and this debt ceiling, people are like, oh, that's great. Quantitative easing. So there will be no recession, right? Is what the market is thinking. But you don't understand. Elon just said if we increase another 25 point, you have to understand the position of Elon is running 3 companies. He's running not just 3, he's running multiple companies. He has a lot of insight into different industries. And if he says another 25-point basis move is going to put you into a deep recession, we're going into a deep recession. And if we increase another 25, you're just absolutely obliterating the market. And this is why I always highlight earnings are extremely important. Earnings are extremely important. And the frontline CEOs that are going to be at least more honest, I feel like Elon is at least more of an honest CEO for the most part. I'm not saying they're 100% honest, but I mean, if it was anybody, I would believe more him than say, whoever else that's out there, right? Like a lot of your CEOs will lie just to try, so essentially the company won't fold, right? Like Elon seems to be pretty open and honest about his position and what he feels about the market. He's always told people his feelings, right? And it's got him in trouble sometimes, but at least that part, and I think that's why people like him so much is because of that fact, is that he seems very transparent about what he's doing. He doesn't hold back, right? And so if he's telling you that we're going to go into a deep recession if we win another 25 and then we win another 25, again, this is right before we were getting that last monetary policy. Now we have it. We haven't seen the direct effects of it yet. Q3, it could be extremely, extremely nasty. Are we going to try to run up before Q3? Doubtful. If we start talking about recession next Wednesday, and something I've always talked about going into a big event, which we're going to see this weekend too on the option pricing, how Wednesday is going to shake out. If they start talking a recession, that could be really worrisome. And we'll see how much of an impact that has on the market. Again, you're not having Powell come out and field questions after, so you may not have a huge impact, but nonetheless, we will see, right? And then understand every time non-farms come out, they're revising old non-farms and bringing them way down. So these job numbers that they're quote unquote saying that, everything's fine and dandy, again, you got to understand there's more to the story. It's not just black and white, right? Like there's people working 2 to 3 jobs, right, just to stay above inflation and stay above water, and then still buying generic store brand items, right, and all these other issues. So again, we will see, but we go from there. So Tesla again trying to retest that the 180. Let's see if it can break 180 tomorrow. If not, maybe get rejected again and come back down. It's people are getting overexcited, I think, at this point. I think this thing is going to start rock and rolling back up. If it does, it does, right? Like, it's not that big of a deal. In my opinion, I'll wait for a normal pullback and get in. I want more confirmation to the upside than just, okay, well, let's ride a deal that is supposed to get done anyway, and think that's just positive information, right? Like no, I don't believe that. But nonetheless, we do need to hold the 165. We break below that. If we get a solid daily candle below that, I think we're going to make a new low. I still feel like we're going to hit that 140 at some point. Just have to be patient, I think, to get there. Palantir, again, massive candle today, rock and rolling. Huge pump. Again, AI is just absolutely pumping these stocks. So again, I was buying roughly around this area. I thought it would have came lower, but lucky enough, I got a little piece of this by the time this thing started running up. So not as much as I wanted, but I still feel like this is going to come back down. I don't know how low. Again, it all depends on timing on how these things will play out or shake out. So we'll see. BA, of course, is going to be between 220 and 195. If it's not, then the market is fine for now. JPM, again, still playing range, did get a bit of a boost. You're ceiling for this, you're looking for a break at essentially the 145. Otherwise, it needs to hold the 134. If it breaks that, could gap fill that, and then could potentially make a newer low. But we'll see, especially on this market that we're in, where these artificial pumps are just really kind of irritating, to be honest. But again, patience is key, right? And you take advantage. I've taken advantage of some of these pumps. It's not like I'm saying I haven't played anything to the upside. You should be know how to play both sides, but also realize that if those normal stocks that you're looking at aren't at the bottom, then why would you be buying the top, right? Like, you wait for a normal pullback. Speaking normal market here, wait for a normal pullback before entry. Right, maybe this normal pullback will be more than just a normal pullback. We don't know. It all depends on timing. But this parabolic rip up, like the whole dynamic of the market's going to change because of the Fed are quantitative easing again. And I'm pretty sure that's why the market is running, because it's assuming that we're going to start getting quantitative easing. Go back to 2019. Let's start pumping the market. You can't. You have inflation that's still high, and the Fed are continuing to raise rates, and you have a banking crisis still going on. Like, something bad is going to happen. Like, when I talk about like explosion, you're talking about like a bunch of banks are just going to randomly go under. A bunch of businesses. There was a huge layoff today as well. I can't remember the name of the company, but that was a 30%. They essentially let go 30% of their workforce. Like, it's going to crater small business like bad. And that is the problem. That's a concern. And that is, and that's what we're worried about, right? Because at the rate in which we're continuing to raise rates, it's just going to be bad. Like, it's just going to come out of left field, but it's not really going to come out of left field, kind of like the pandemic did. It's like we were aware of it. And if you were paying attention to essentially the contagion or the contagious aspect of it and how quick it was spreading, it was only a matter of time before it would be here. And so, with that being said, and then we saw what happened to that, right? Like, we had multiple limit downs, right? Like, that historic time isn't going to happen again, right? Maybe not for another 100 years before you see that. But nonetheless, we were aiming for a recession before that even happened. And the problem is that the market doesn't want to let it happen. And that is a huge problem. Like, you need these normal cycles Who is going to pay high prices? Do you want to pay, 10x for something, for items, maybe it's your home or your car or whatever the case is? Do you want to pay those kinds of prices? And the answer, I'm assuming, would be no. So you need the normal cycles to happen. You need a recessionary cycle to happen, which means demand needs to be killed. If not, the Fed are going to continue to raise rates. And they were all about it today. Speaking of which, if that's the case, this thing could crater like something fierce. Well, this animal that they're building and putting the amount of pressure they're putting on trying to keep demand down is historic. Historic. So I'm not going to continue to beat that story with like a dead horse, but nonetheless, this is what's important, right? And this is why I still don't believe. I'm not going to put tons of risk on to the upside to think that this is going to be back to all-time highs. I am not. Not saying I won't play to the upside. I have played to the upside a couple of different times, and this whole time, right? I play up and down. I have bearish positions. I have bullish positions, and then I play intraday, right? So I play swings. I play options, right? And understand that right now nothing's changed, and it's getting worse. And all you have to point to is the battle between the Fed and inflation. This whole deal with the, again, debt ceiling is ridiculous, but nonetheless, we'll see what happens. I'm not trying to complain either, but I'm just trying to give like facts. Like what really matters is the Fed is continuing to raise rates. So that being said, if you made this far, thanks for hearing me ramble on and on and on and on. Go ahead, drop a like button. Until next time, I'll see you guys later.